Hi, and welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord and Genuity Wealth Management. Thank you for joining us again this week, where we do a live weekly update on everything we're seeing out in the markets. Of course, there's always news on the pandemic updates, and we're definitely into the second wave. But today, of course, finally, hopefully, let's say hopefully, the last day we have to worry about this U.S. election. So we'll talk a little bit about what we're seeing in the markets already so far with the Tuesday count, what we can expect tonight or this afternoon and tonight, and what it means for us going forward, or what it means for the markets going forward. So as always, we're going to cover a bunch of different things in here. Do not take it as advice. Remember, it is for information only. Any specific advice, please contact us. Go to mikeonmoney.com. You can find our email, our phone number, my calendar. Get a hold of us. We're happy to answer any of your specific questions. But without knowing your situation, don't take any of this advice. Everyone's situation is specific, and we want to make sure that's tailor-made. Or do your own due diligence, but make sure you're applying the information correctly. And as always, we try to keep the information as up to date as possible, but things are changing rapidly these days. So I will actually try to point out a couple of slides where information has changed since we made this, but for time and purposes, I wanted to get it in there anyway. So as always, your microphones and videos are muted and turned off, so you don't have to worry about moving around or grabbing a coffee. Feel free, if you have a question, just click on that Q&A button. Let us know if you have any questions. We'll try to get to them all during the session. If we don't, of course, we will follow up with you afterwards to make sure that we answer any of those. If you're watching this on the replay, like so many people are these days, again, just go to mikeonmoney.com, send in your questions, or give us a call. We're happy to answer any of those along the way. So let's dive into things. What we're watching for this week, we're looking for the manufacturing numbers out in the US for October, but really we're waiting for an election result. That's the main thing the market's focused on. Obviously, we're focused on, and things will start getting heated up a lot more this afternoon. We did see, after a bad week last week, the stock futures Monday started to really gain some ground. We'll go into what that means, but really it's the market becoming a little more optimistic that there's going to be an outcome, and is leaning towards a Biden, but we'll take a closer look at that. And the futures on the S&P 500 were up almost 1.2%. This was after Monday's close, and of course this morning we've seen some strong markets after a really rough week last week, heading into the election, and that was just on the expectation. The market is given a bit of an expectation, or a bit of a lean to a Biden win, but we'll break that down in a bit more detail of why and what we're really seeing there. And we also saw that in NASDAQ numbers, a rise there. Oil actually has been quite volatile. Here's one of those things where yesterday we were seeing a big slide, dropping down to almost $36, $34 to $36 a barrel. It's up a few dollars today, still well under $39 a barrel, as we go back and forth on between the COVID shutdowns and, of course, the election. We are seeing Biden's leading Trump in the polls by about 10%. Again, we've talked about this in previous videos, just on really comes down to the swing states. Of course, they have that electoral college situation. Also, the polls, keep in mind, of course, going into the 26th election, the Democrats were ahead on the polls. And what in looking at the numbers, or not me looking at the numbers, but reading on the experts looking into those polls, not poll numbers, where it can be quite misleading, and why we have to be very cautious is a lot of Trump voters don't want to admit they're Trump voters. So they won't, they're not exactly getting accurate results when it comes to those polls. So we want to keep that in mind as we go into tonight. We might see some upsets. Hopefully not. Hopefully we'll see things go smoothly. But we'll talk a little bit more about that. And of course, there's also looking for control of the Senate and the House. Is it going to be a split again between the Senate and Congress? Is it going to be a majority one side or another? All these things need to be played out through the night here. We are starting to see, as I mentioned, the markets are starting to lean a little bit towards a Biden win. And of course, as we've talked about in our previous deep dive video on Democrats versus Republican, if one wins versus the other, the market is looking at a clean energy revolution, as the Democrats have kind of put a plan, a $1.2 trillion plan to really boost this clean energy or clean tech market in the US to create new jobs. We talked a little bit about why I think anyway, and I think the market thinks this is a good idea because of course, the fossil fuel jobs, you can do anything you want to bail out the industry, but if the industry itself is shrinking over time, as we move away from fossil fuels and into other alternative energies, which is definitely the trend. The trend's been going on for a while. It continues to go. Despite the last 4 years, the US has kind of resisted that. The rest of the world has not. Clean technology is becoming more affordable, more user-friendly, and more achievable than fossil fuels. So we're seeing that shift. So you can invest a lot of money into an industry to bring back some jobs that are going to continue to be at risk or shrink as total job numbers go over time. Or you can invest in an industry where you can create new jobs the opportunities in that market is only going to grow over time. Obviously, for an economy, it's better to go for the growth phase. So that's one area where Biden, that Biden lean-in win is being affected in the market right now. We're also seeing the Treasury market, and here's where we see the back and forth. There's the Treasury market for U.S. Treasuries has been pretty slow for the last couple of months, and all of a sudden we're going into trade-in frenzy. But we're seeing the trade-in frenzy on both sides. That's different firms, different countries calling for Republican or a Democratic win. So it's not a clear-cut market decision that we're going to see a Democratic win here. When we talk about those takeovers that we have for since we've gone into COVID, we've talked a lot about the takeover deals that were negotiated prior to. In fact, we've touched on the Louis Vuitton Tiffany deal. Where Louis Vuitton is buying Tiffany's. They negotiated the price pre-COVID. And of course, going into COVID, they wanted to renegotiate the valuations and the price that they're paying for that. That's been going back and forth for a while. It looks like Louis Vuitton here has got their wish, and they got a $425 million discount on a $16 billion deal. So it is going to go through, or it looks like it's going to go through, but a little bit less. And we saw the same thing with the Air Canada Air Transat transaction as well. U.S. consumer spending has beat forecasts. So, we've been watching all the numbers out of the economy. U.S. has been spending a lot of money. Now, remember, these are September numbers. They're both after the reopening. So, that surge, that pent up demand as people reopen, but also it was on the first, the money coming out of the first round of stimulus packages. What we're really going to watch for in this election is who comes out the winner. There is going to be a second round of stimulus package. Might be a little more generous if it's Democratic, might be a little less generous if it's Republican, but there'll be a second round, but it's going to be smaller no matter what than the first round. So that means, how does that affect consumer spending, especially going into the holiday season? So, unemployment's still high. We saw, one number that I don't have in here, but we saw a huge number of white-collar jobs being downsized in the last month, which that's a trend that we hadn't seen. The white-collar jobs had been predominantly unaffected going through the pandemic closures, but we started to see those really being affected. So, of course, it was the higher-paying jobs. So a little bit more nervousness out there when it comes to the job market and the economy for the holiday season here. So even if we don't see the higher numbers, if people are nervous, they might limit their spending. So we'll keep a close eye on that. Fed is reducing the loan minimum, on their or easing some terms on their Main Street loan program. So this is a lending program they put in through the summer to help companies out through the pandemic closedowns. The program has not been used a ton. There was a bunch of free money that was kind of given out to corporations. That was used, of course, oversubscribed, and there was a lot of controversy about who qualified for it. But there's a lending program that was also put into place. Canada also had one. It wasn't overly tapped into either. Mainly due, if a company's struggling and they go take a loan, they still got to pay that loan back. So, and it's a preferred creditor, so it would be kind of a last resort for companies if they think you can get by without it. So that's why we're probably not seeing a huge uptick on that program. The U.S. Treasury is up in their debt auction. So this is the government creating liquidity, or printed money is normally called out in the street. Increasing basically on, that there's going to be a second round here of stimulus package after the election. So they're just getting ready for that. We are seeing some jitters on Wall Street, kind of calling it the war game. Looking at election drills, client calls. Yeah, I was talking with someone from our Boston office this morning. They've been told not to come in the office today. Concern of potential violence or protesting, depending on the outcome of the election. Anything can happen. They're worried about what's going to go on in the markets if it goes in contested election. Any kind of unexpected scenarios being thrown around the boardrooms, trying to figure out exactly how to avoid liquidity crunches or technical errors or any kind of fallout from a problem election, which we'll dive into here at the end. As always, we're looking at the numbers. They're not getting better, unfortunately. It's really difficult to kind of continuously dive into these numbers on an ongoing basis. The world is approaching that 50 million case level. We're already at 1.2 million deaths. The U.S. quickly approaching the 10 million. They've hit some high numbers, 100,000 new cases a day. The number of deaths about 1,000 a day, or just around the 1,000 mark a day in the U.S. As they quickly approach the 240,000 level. I keep on remembering these milestones. I remember when we were doing these weekly videos, and the U.S. was it was kind of like surreal that we were going to hit 200,000. And now we're already quickly approaching 240 with no signs of slowdown there. Same as Canada. I mean, obviously better, but at the same time, that 10,000 number seemed quite far out of reach for Canada, and the 200,000 on the infected. Now we're going up by 2,000 or more a day in infected for Canada, and we're well through that 10,000 number at 10,200. So. Keeping a close watch on the second wave. Obviously, people stay safe out there. As always, this list is not complete. We do take countries out of the rankings to fit it all on one slide. You can always go to worldometer.com and see the full list there. Just try to hit the highlights. And of course, we are seeing places like Spain and France and Italy and the UK spiking again to past the April highs, and more closures come down. Borders are starting to close again. So obviously that's going to play into some global economics that we'll talk about. So let's look at the recap. Well, last week, there's a little bit out of date. We put this together Monday morning. Of course, last week we did see some pretty tough days on the market on the negative side. Not really unexpected though. If you've been following our videos, pretty much said leading into the election, the markets will take a pause. There will be profits taken out of the market as people want to see what the outcome, or see where the election is going, or what direction. And then today, a little bit yesterday, but mostly today, upticks on. Again, just people making a speculative bet on Biden, not guaranteeing for sure that that's going to come through. Of course, I was just being told by one of my team members today, Sophia, mentioning that BC Lotteries, you can actually place a bet on the outcome of the election, which I think is surreal as well. But obviously, there's two sides to still consider. I think it's a little too tight to call. We did see some movement on the dollar, which we'll talk about, and a little bit upward tick on the U.S. dollar. But again, that's really on the flight to safety or uncertainty. We've talked about the U.S. dollar is considered the safe haven, so we always see it move up when there's a lot of concerns or not sure where things are going. Investors and institutional and countries will hedge on the U.S. dollar. Gold also seeing a bit of a move, not too much, but a little bit edged up. And again, looking at those stimulus packages, gold is going to move on those stimulus packages, so that's good. Oil, of course, dropping. My ongoing theme on oil, don't be there right now. And of course, if we're going to the second wave of closures, that's not good for oil. So not a surprise that we're seeing that down a bit. On the what we're seeing up in the U.S., of course, the election, we're seeing it tonight. Biden's got a bit of a lead, 52% to 42%. When we last updated this. Well, I won't get into. Let's talk about the election here at the end. But obviously, and I've already kind of talked a little bit about the polls and the concerns there. The Federal Open Market Committee is beginning a 2-day meeting around the interest rate policy. The U.S. and Canada, for that matter, are really working hard to put together policy to really keep the inflation low, keep interest rates low, which is a balancing act between printing money or creating liquidity. Of course, pushes inflation up, but they do not want to have to raise rates, at least for the next little while. They're targeting for the next 2 to 3 years, if that's possible. That will be a really strong stretch to achieve that. So they're really looking at whether tools they have in their market to keep that rate change at zero. We've talked about again, oil, but they're always in the news these days. Chevron and Exxon are cutting cost. They're one of the areas where a lot of the white collar jobs are being lost as well. They're reducing any excess spending very aggressively, really trying to stay as much into the black as they can, or keep the red as limited as possible as we go into the second wave and second set of shutdowns on a global basis. Honeywell actually beat their profit expectations for the quarter. The market was looking for a big hit on the aerospace sales, and there was, but they were able actually to pick up a lot of sales on the automation equipment. And we've covered in previous videos kind of talking about how this is probably a trend we're going to see when we talk about technology. It's not always our phones and things that we use on a day-to-day basis, but also in warehouses, in production, as they shift to fewer workers, which is not good for the job market, but of course safer, because the fewer workers, fewer chance of COVID exposures, spacing people out more, so having automation do more work in between people handling product or handling part of the process. So we're seeing Honeywell's automation equipment sales go through the roof, picking up for their hit on the aerospace side of things. The online giants, our tech giants, are facing. If you've been following it here in North America, of course, in the U.S., we've had Twitter and Facebook and I think Microsoft, all in front of Congress and the Senate, all on antitrust. Google's the other one. Sorry, Google's the other one, testifying about their how they squeeze out the small players, or they limit access to the market to new entrants. EU's looking at the same thing, really diving into their algorithms that they use to figure out what ads to show us, right? So how they target us and mine all that data. So they're forcing some of them to expose their algorithms, especially around how they apply that to advertisements. So that's actually going to be interesting to see how to play out. Could be a standard that gets picked up around the world. Another really interesting move through this COVID or through the pandemic shutdown is drug maker AbbVie is bolstered their sales on Botox. So it's, you know, as we've gone through this closures and limited social access, Botox has gone up. I don't have a great explanation for this one. Obviously, people are using it more. Maybe it's just because we're all aging a lot faster with all the stress and being limited. More and more people out there getting Botox injections to stay looking a little bit younger. Or I don't know, but that was an interesting one I saw out there where we saw them see a much better profit outlook as those sales started to increase. Marlboro, maker of Altria, is taking a $2.6 billion hit to their Juul sales. If you're not familiar with Juul is kind of the premier vape pen for smoking, or the smoking alternative, I suppose it is. The e-cigarettes, sorry, that's the e-cigarettes. You know, they're facing a lot of regulatory scrutiny. There's a lot of talks, just pre-pandemic, and I guess kind of got lost in the pandemic around kind of the flavors that they had, bubblegum flavor and cotton candy flavor, whether it's targeted to children. So that one's crumbled. The valuations have crumbled. I think sales have fallen off quite a bit there, especially through this pandemic. So I can't say I have a lot of concern around that. I generally don't invest in the tobacco or that market anyway for clients, as a lot of my clients prefer to stay away from those types of stocks. But you can find out more about that in our ethical and social and governance investment video that we have out as well. Coming up in Canada, we also are waiting for our manufacturing index to come out for the month of October. But also Canada, of course, pins and needles, keeping a watch on what's going on in the U.S. We did see some good growth in Canada through September, but forward is a little bit clouded. Again, it's just the second wave. Of course, we've seen Quebec close down again. Ontario taking a much more targeted approach to their shutdowns, but they have shut down a lot of areas as they see flare-ups or breakouts in certain areas. In BC, of course, we're always on teeter-totter and on that edge of what's going to happen. Politicians are pushing to hopefully not shut down. Even the PM is out there saying we're trying to tackle this second wave without having to close down. So hopefully we see Canada's numbers start to improve or at least slow down a little bit if we can prevent a second shutdown. More witness testimony in the Huawei CFO's extradition case. This seems like it's been going on forever. Almost, got kind of shifted to the background during COVID, but we have had a few rulings out there just on the evidence and whether it was legitimate and a lot of back and forth. Well, now they're going through witness testimony and they're in the fifth and final day, although both sides have asked for a few more days to get all the witnesses through. So we'll see how that plays out. Really, that's just going to come into play to Canada's trade negotiations with China, not so much on the economy directly with the election here. Canada's Alberta, the province of Alberta, is negotiating with a Saudi firm to talks on putting a petrochemical plant in, spending anywhere from $5 to $10 billion in Alberta to build that. So from an oil and gas perspective, one might see that as positive, but keep in mind these plants take 3 to 5 years to build and get up into production. So it's not uncommon for companies such as the Saudi firm to say, in 3 to 5 years, we think we'll need this production there to take part of the oil and gas resurgence or at least uptick for a while. Again, I would call the oil and gas industry a decline in industry, but it doesn't mean that it's going away. And so it's great investment for Alberta if they get that. Of course, we'll have to look at it from a Canadian perspective. as to whether that would be better built by a Canadian firm, but I just don't see any of the Canadian firms planning to expand into that kind of investment at this point in time in Alberta. Top courts allowed a class action against Desjardins Financial Services. So Desjardins, if you're not familiar, is a big financial banking institution in Quebec, well, across Canada, but predominantly in Quebec. And the Quebec courts are the most broad leaning on class actions. And this goes back to 2008. And it was really all centered around one employee who had a data breach. They shared about I think the report I saw was 2.9 million people's personal financial data. So they're allowing that class action for those individuals who are affected to go forward against Desjardins. So we'll watch that play out, but really shouldn't affect too much in the markets or the financial firms, as it was it was localized, and it was actually on purpose by an employee. It wasn't necessarily a technology breakdown. On the currency front, the US dollars, we mentioned, little bit uptick, but pretty flat. Again, the market's just waiting for this outcome of this election. The dollar rose against its index, its basket of index or currencies by about 0.1%. So not a huge move. The euro paused its slide a little bit as the manufacturing index grew a little bit, and some initial positive estimates for October's numbers. The Canadian dollar fell a little bit from last week. I think we were at 76.02, 75.94. But it is expected after the election to pull back a little bit, might get into the 74s. But as we've been talking about, the trend is up or down for the US dollar, up for the Canadian dollar, likely heading somewhere around 78 cents in the next 6 months. On the commodity front, again, oil, won't dive too much into there. Did get down to that 36, actually 34, I think we touched on. Around the 36. It's a little bit higher. I think it's around 37, 38 right now, or last look this morning. And that's, the bigger decline, because it was in the low 40s there. The bigger decline was just on as Europe is shutting down and the potential of more shutdowns around the world to go into a second drop in demand for oil, or a prolonged drop in demand for oil. Is putting more pressure on. We did see a little bit of uptick again, just on the positive, or I won't say positive outcome of the election, but an outcome to the election. And again, gold, the same idea. So let's talk about the election. So right now, as I mentioned, the market is talking about the blue wave, right? The Democratic wave coming in and sweeping through, winning everything in a landslide. Which would be great, because we did actually do a deep dive on Friday. It's up on our channel. If you go to our YouTube channel or mikeonmoney.com, you'll be able to see that there, where I talk specifically about the potential outcomes of this election. Really, there's the two things. Well, I guess three things really, but two. One is we have a landslide vote. Either way. A clear winner, undisputed, that there won't be enough outstanding votes in the mail or uncounted by midnight tonight or sometime tonight that says, yes, this is going to be the next president of the United States. That's obviously the most ideal outcome that we can hope for, because then there's going to be no carry forward. There'll be no court cases, there'll be nothing. It will just be, okay, here we go, let's move on. Now, Republican, the markets will like Republican right away, because it's the devil, it's good or bad, your opinion of good or bad, your politics, you can think that's good or bad, but the market will, as I said, I always say the market doesn't like uncertainty. The market will say, okay, well, we know this person, we know this party, we like it or don't like it, but we know what's going to happen. So that will be good. That will be a positive uptick for the markets right away. If we see a Democrat or a Biden win, the markets will still like it. We will still see an uptick, probably a slower uptick, as the market is going to still digest and kind of take a little bit of wait and see on the what they're going to do, how they're going to handle all the things that they want to roll out. They talk about the tax for over $400,000 in income a year. They talk about, that $1 trillion spending on clean tech, but all these things take time. So the market's going to be a little bit more, it's going to be optimistic, but a little bit more baby steps on that uptick as it, sees how they play that out, sees how they proceed, what are they doing with healthcare, et cetera, et cetera. So those are the kind of two good things, I guess, that we can see come out of tonight. Of course, the real bad thing that we don't want to see is a very tight vote, electionary vote, because then we're going to get into the counting of the mail-in ballots, double checking, the different write-ins, potential going to the Supreme Court for decision. Now, it wouldn't be the first time it's happened. It happened in Gore v. Bush. It was a couple of weeks while it was in court, and they had to decide. If you remember the Florida count on the Chads, right? The little computer cards, the Chads, that were the hanging Chads, because they didn't completely fall off when going through the machine, which miscounted some votes. That was very controversial. That's the worst thing we can see for the markets. But if that happens, do not panic. We will see volatility in the markets. We will see some negativity. Again, that market is going to try to process that uncertainty. That's fine. Volatility is not always a negative thing. Portfolios are definitely well positioned for it. If you have any questions about that, by all means, give us a call. But don't be concerned. It will wash out. It will just take longer time. That's why we don't want that outcome. We don't want a contested outcome because that creates too much uncertainty, and who knows what can happen. The other bad thing that obviously we're out there concerned about is if there's any violence. Police throughout the United States are ramping up to cautions. We're seeing some businesses boarding up their windows, concern over either party, right? It's a concern that either party will be upset that they're not being represented the way that they want, especially if it's really, really close. Obviously, we're going to see some heated debate. So those are the big concerns we're watching for tonight, and how we can see that, how we might see that play out in the market. As I mentioned, we are seeing numbers. These are the futures. So these are after markets of yesterday. Definitely leaning towards that blue wave is what they're looking at. The S&P 500 futures up almost 1.25%. The FTSE 100 up almost 1.7. DAX being Germany 1.7. Hang Seng almost 2%. We're seeing the 2-year Treasury yield up slightly, and the 10-year yield up almost 3 points. And that's, we were talking about a lot of Treasury trade. Crude, as I mentioned, did bounce up a little bit to almost $38. That's for the December futures, and gold almost $7, almost $8, just over 1,900 an ounce again. Again, on that hopes of that stimulus package. So we are seeing that markets are leaning that way, but it's still cautious. We're seeing it on both sides, bets on both sides happening. They just seem to be leaning a little bit that way. So we're going to watch things really closely. If you want to watch things, really, it's not going to be till about 7 p.m. or between 5 and 7 p.m. our time that we're going to start to see some meaningful numbers come in. That's when your East Coast voting stations are going to be closing or start closing, or at least start tallying. Really pay attention to the swing states: Florida, North Carolina, Georgia, Texas. Really watch those swing states, because those are going to be more meaningful, of course, than New York and California, which are predominantly Democratic to begin with. The Midwest is where the real focus is going to be on, whether the Democrats can tip some of those electoral college states. into their favor. So you can watch that into the night. Again, if unless it's a really big landslide, we'll probably go late into the evening tonight before we see kind of end results in any meaningful amount. And really, if it is a tight race, we might not know for a week or two, depending on, different states have cutoffs for the mail-ins to come in. Different states have cutoffs for tallying the votes. I know there's a lot of information out there that, we've always known on the day of the election. That's not actually what happens. Even if you look at BC, they're still tallying some, our vote from October, was it 23rd? We're still tallying some write-ins that are very tight. They're not going to swing the majority. And that's what we usually find out on election night, is if there's a clear majority. There might be some electoral areas that are still counting for days, weeks to come, to decide who wins that. But those ones aren't, there's not enough outstanding votes left to swing what the media usually makes the call in the election, saying, there's so many votes in, so many electoral seats have been won, they declare a winner. So keep that in mind. We're waiting, hopefully, to tonight have enough of a one-sided vote to be able to call it. But that's, if it's not, again, don't be concerned. Don't worry too much. In the end, we will get through it, and a little bit of volatility here won't hurt the portfolios. Maybe even more opportunity than we've seen over the last couple of weeks. So with that, thank you everyone for joining us. Again, go to mikeonmoney.com. You can see our deep dive into the outcome, or the potential outcomes of the election, which just highlights more detail what we just covered. And thank you everyone. Stay safe out there. Hopefully we get through this today, and I won't have to do another video on the US election, and we can move things forward. With that, be good. Talk to you soon. Thank you very much.